Welcome to our comprehensive guide on South Carolina tax residency. In this video, we'll explore the ins and outs of establishing residency in the Palmetto State and how it can offer significant financial benefits. Whether you're moving for work, retirement, or just a change in lifestyle, understanding the requirements is paramount. We'll break down why becoming a tax resident in South Carolina not only helps you comply with state laws, but also lets you take advantage of favorable tax provisions that the state offers. So stay tuned as we dive into the key details that can impact your finances this year. Now, let's define what tax residency means in South Carolina. The state primarily uses the 183-day rule to determine tax residency status. Essentially, if you spend at least 183 days in South Carolina during a tax year, you're typically considered a resident for tax purposes. This means that every part of a day you spend in the state counts towards this total, even if it's only a few hours. For those who frequently travel or split their time across states, monitoring the number of days in South Carolina becomes crucial, as the South Carolina Department of Revenue may require you to provide proof of your physical presence. Tracking apps like Pebbles can be invaluable for this when it comes to maintaining accurate records. In addition to the count of days, there are other factors that the state considers when determining your residency. These include your intent to make South Carolina your primary home, which can be demonstrated through various personal and legal documents. It's important not just to meet the day count, but also to show that you're committed to living in South Carolina. We'll discuss the benefits of tax residency in more detail, including income tax relief, property tax exemptions, and more, to understand how residing in South Carolina may lead to significant financial savings. One clear advantage of South Carolina's residency is the progressive income tax system. Income tax rates range from 0% to 7%, but the state provides numerous credits and deductions that can substantially reduce your tax burden, especially for retirees. For instance, South Carolina does not tax Social Security benefits and offers generous deductions for retirement income. And for homeowners, there are property tax benefits as well, such as the homestead exemption that can significantly lower your property taxes, especially for those over 65 or disabled. Lastly, it's essential to understand how to establish and maintain your residency status in South Carolina. Knowing the process of documenting your intention to remain in the state is vital. This includes filing income tax returns if your income meets state thresholds and keeping track of residency-based documents like your South Carolina driver's license or voter registration. Maintaining your tax residency status requires ongoing awareness, especially for those who have ties to other states. Avoid risks of dual residency, which can lead to challenges, including double taxation, by clearly establishing your domicile in South Carolina and maintaining accurate records for compliance. With the right strategy, you can enjoy all the benefits that come with being a South Carolina tax resident.